Welcome to Trading Lounge and the US indices for the 18th of February. We'll also cover some stocks after we've had a look at the SP and the NASDAQ and maybe even the Russell as well. So just from the outset here, as you may know, I've got two counts for the S&P. So one of them is a conservative count where we have wave 4 here, and we have 5 waves moving up through to here to the 4,000, and we finish with those 5 waves. So wave 4 to wave 5 here. So that's still, that's still valid. And the other count that we have is where we have wave 1 up to the top here, and then we pull back for wave 2 here. Okay, and then if we pull back for wave 2, that means we move up to wave 3 here. So a much longer term trend, and that would kind of sync in with the commodity cycle that that I've put out as well. And as somebody has mentioned before, that they have been not in sync, the structures. So that's something that we'll need to keep an eye on as well. I'll also start doing some the 10-year yield interest rates as well, because as this pushes higher here, if rates are going to turn higher, which they are starting to lift off the ground now a little bit, and I have been doing some work on them, but I've got to go back and have a look at the trend since 1980, that whole trend coming down to work out if we've got a low or we've got just a current corrective rally. But obviously those high interest rates are going to put pressure on this trend, so we'll need to bring those into the fold as well. So I'll be doing some work there. But one of the good things here is that we've got this nice large number here, 4,000. Okay, so if we are a little bit patient and understand that obviously that this 4,000 is really going to be a bit of a line in the sand, and we'll be able to work with it in many different ways. So yeah, obviously when we get to the 4,000, we're either going to see this happen here where we have the arrival here and then we'll have the correction here, or we're going to see an overshoot pattern where it doesn't stop at the level here and then continues above it. So they're the kind of first things that we really need to consider. If this is the case here, this overshoot pattern, then it's most of the time, because we're not in a parabolic trend with the indices at the moment, if this was going to occur, then it will definitely fold back here, and then we can pick it up, and then we get to use this level here, the 4,000, and we get to work it out. Now if we have a reaction from here, then we're either going to get this pattern where we have the reaction, the first high above the level, and then a corrective pattern, and then we get support here, or we don't come back below the level here and we just continue to move up from that point, and that's valid as well. But in both instances, in all instances, we'll be able to use this number, the 4,000, right from the get-go here. So basically the market can't do that many things. It can either just continue and keep going straight up and not stop there at all, or it could hit here, the 4,000, and drop and never come back. But if it's going to have a corrective pattern across this level here, then we'll be able to work it out within reasonable time. So that's a bit of a saving grace working with that number there, and because the 5-wave structure here that we've got so far fits in this particular space. Now today we can look at a trend moving much higher. We can also we're going to have a look at a few counts, and this is what the video is about. This video is not about this is going to happen and that's going to happen and so on and so on. It's about exploring the possibilities and then coming to your own conclusions. And sometimes I can see that something is, I have more confidence in something than one count than another. But I think it's a good idea to put the counts on the table, and it gets us all thinking. And it's just putting ideas in the hat. That's all, isn't it? We don't want to get caught up in the negativity of being positive or too positive or too negative in anything. We just need to gather the evidence. But yeah, having more ideas in the hat is a healthy thing. So for a longer term count, we looked at this here, which would be in line with the commodity cycle. We can look at this as wave 1 and 2 here, and 1 and 2 and 3 and 4 and 5 and 4 and so on. So that's a much longer term count. Will that occur? Well, I don't know, but if the commodity cycle, well, the commodities have been under pressure, haven't they? Like the 4 banks or the 6 banks, or they're basically controlling the 4 metals and well, the precious metals and crude and copper, palladium, all of those guys, so but they're going to get squeezed out, those those guys, except for Morgan's, who basically have took over Bear Stearns short positions, and that's what's created the rally in March, covering those shorts, and they've just been collecting gold and silver. They got tons of it, but the other guys, they're going to be squeezed out. They're in for a shock. So yeah, so anyway, there's this one here, but once again, will be, for this to occur, we would need the 4,000 as a support, wouldn't we? Even if we had a reaction back here, we'd still need to see it there. But I'd expect something like this move, well, this is at the old high here, but having some sort of correction at this level would be the would be natural. On the daily chart here, I've got this sort of conservative count here. Well, it's just one step further, really. If I put this orange wave 4 over here, then we'll have a top in play here for that wave 5 can come down. That's the most conservative count I've got. This one here gives us 1 and 2 here, and then 1, 2, 3, 4, 5 up here for the third wave, back for the fourth, and up for the fifth there. And that's okay too in that regard. We can just move up to here. We can have the correction that I was speaking about, and then having the first high above the level. And this would be a natural progression here going further, and if we note that that could be a top, but if we note this is corrective here, well, then we're basically back bullish over here, or we may be able to work it out further in other markets. So if other markets haven't rallied and topped out, or some will be leading, some will be following, so we need to take that into consideration. So we just need to work through the problem. But the good news is working through the problem with this large number here. And also too, we need to be mindful not to make decisions too early about things unless we really have some evidence. This group 1 above here, 1, 2 and 3, 100, 200 and 300, so 4,300, and down to group 2 here will be the natural swing range for the correction at this level here. So it's important not to get chopped up in this space, and it's also important to, there's parts of the trend we could get. So if we noted that this is corrective here, then we can look at trading this move up through here, and we can look at the 5 waves up, and we can probably short this one. If we get 5 waves here, then we can short this one here. So there's things that we can do. I'm just looking at the sort of bigger picture here at the moment, and just saying to you, we're going to be having some type of correction across here, and the swing range is group 1 and group 2 below here for that. And yeah, and I wouldn't turn bearish in a bigger way unless this group 2 here became the retested resistance at that point. Then we could look at it, and we'd probably need to look at it in as wave 1 here, and coming back for wave 2, coming lower in this instance. Now, this whole little area in here can be resolved in different ways as well, and that's what we're going to also look at now. We're going to look at the intraday trends. So I'm not too sure. I've got different counts everywhere, so that's just that one, so that's okay. So this one here, this one gives a little bit of a different spin on it, and this is also what we've been working with as well. So with this one having blue wave 4 here, looking at, instead of putting blue wave 5 here, looking for another 5 waves up to this point to have it finish up here higher. So in this case, we'd look at this as wave 1 and 2 here, and then obviously going up for wave 3 here, and 4 and 5. So this is something that we're working with at the moment as well. Yeah, so now we need to go in and understand this this section here. Now, just on the outset here, it's also possible to have, copy this, to put wave 1 here, and copy this and put wave 2 over here for this. Now, if this low is breached here, then we have to go to wave 2, otherwise we'll go straight up into wave 1 here, and we'll treat this as a wave 4 here. So if the 3.9 is breached from this point, then we're going to be going into this wave 2 here. If not, then we'll be pushing straight up. This is what I need to talk about today, and we're going to have a look at the different scenarios in different markets. So on the 1 hour chart, just drilling in here a little bit, so we've got our blue wave 4 sitting here. So in this case, I've got both counts sitting here, so I just need to go over it. So one of them is we've got wave 1 and 2 here, and then so 1 and 2 here, and then we go from here, we go all the way up to wave 3 here in this blue wave 1, 2, 3, 4, 5 for blue wave 3, back for wave 4 here, and then we just go straight up here for wave 5. Copy that, put that there, put that there, put that there, and so we need to talk about that in a bit more detail. The other count that we've got is having this current top here as wave 5 already and wave 1, and that means that we would come down for the A wave here, so we could put that move down here as the A wave. We're coming back for the B wave now, and then we're going down for the C wave here. So that means that we'll break that low here, and then we'll look for the buying opportunity here. But if the market's going to move straight up through here, well, then we need to be long at a particular point in time, don't we? So we need to understand that as well. Just before we move off from here, I want to just have a look at the the Russell first. So this is 100 ticks, and this is from the low down here. Now we've been looking at this here a bit, so we've looked at this as wave 1 and 2 here. There was no problems, we had 5 waves there. And then I've looked at this as wave 1 and 2 here, and 3 and 4 here. It was difficult. I don't think we can call that. So we can't call, I mean, it would be nice to say 1, 2, 3, 4, and 5 here, and then an A and a B and a C wave here. That would be nice. But this wave 3 here is too short to be that, compared to wave 1 and compared to this move here. So I looked at it as, we noted this is in 3 waves, so I put wave 4 here, and then this wave 5 here hasn't really made a new high here for this. But I can't put wave 4 over here either, because then it starts to overlap wave 1 over here. So this one's a little bit tricky. So it hasn't actually made a high here on this market, but do I call that wave 3 and wave 4, and then we move up for wave 5? So that's where that is sitting at the moment. If I look at the NASDAQ for a moment, this is also something a little bit different. Here I can count 1, 2, 3, 4, and 5 in here, so we can look at that as 1 and 2 here. And then to look at this as wave 3 here is shorter than wave 1, but that's okay because wave 5 is shorter still than this move here. But the problem with this is wave 4 overlaps wave 1. Do we allow that at that degree? But I've accounted for every wave in here, so that's a bit of a problem. With this one here, I can also count it down pretty well in 5 waves. I've got this extra wave here, which is a bit annoying. I've got 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 here for the third wave, the fourth wave here, and then I've got 1 and 2 and 3 and 4 and 5 here. So I've got this extra wave here. So I don't know if I should just pop that on there and then consider all of this wave 1 here and 2 and 3 and 4 and 5, but we've got overlap there. So a small problem there. But this 5-wave structure here for the NASDAQ, this would be the this would be the resistance area here. So if it was going to fail, that's where it's going to fail from. It's going to move up there and then move down from that point. If this level here becomes the support, this area, this top of 61 point, then obviously the market's going to go up from that point. But it's a little bit difficult to get those 3 waves out of that structure. Also, when I have a look at the S&P on that note as well, if I just bring the S&P up here, this is my this is on 5 ticks here. So normally look at 100. So in this case here, I've looked at it as wave 1 and 2 here, and then counted 5 waves up to this point for 1 and 2 here, and 3 here, and a triangle for 4 here as an A, B, C, D, E here, and then going up for wave 5 of 3 here, and that's why we've got wave 4 sitting here for this. So this counts down as 1 and 2 and 3 and 4 and 5 here, okay? Then an A wave, a B wave, a C wave, maybe a D and an E here as well for the B wave, and then the move down here for wave C of 4, and then 1 ABC for 2 here, and then going up for the 3rd wave here. Once again, this is the problem area in here. So you wouldn't really be able, if this was going to be bullish here, you would need that 40 there as a nice support area here. So you can, this is where all the supply is. So really when I put that 50, 60 thing there, I don't really need to do that. I can just put that across there because that's where the real problem is. That's where the most volume would have been turned over at that point. So in a way you need that, you just simply need that as the support here. So there will probably be something like this here, you know, but eventually you'll see that first high above the level, and that's the one that you want here. You know, and that's where you can go long for. That won't take you far though. That will just take you sort of up into the 4,000 area there. But that's kind of okay if you just, you know, shooting the breeze. You just got to be mindful that we don't end up having this down here as the A wave, the B wave, and a C wave down here further, and we eventually count this in 5 waves moving down through here. But I don't see that on the cash market. This is just my work on the rates, on the this one's Kobe interest rates. It's kind of interesting. I'll just have a quick look at it. I'll just put it on the weekly chart. I'll just show you what I'm doing anyway. Folks can join in and add to the count, which would be nice. So coming back to the 80s here, I think Paul Volcker did that, didn't he? Put the things up. Rates up, but anyway, so 1 and 2, and I've pulled all this apart here, so I know that that's 1 and 2 and 3 and 4 and 5 here. So I was looking at that as the A wave here. This is a weekly chart, and then I can see 5 waves in this move here, so that chucks a bit of a spanner in the works. So I had that as the A wave here, and then the A, B, and C for the B wave, and then another 5 waves over here for the B wave here. So an A wave here, a B wave here, and then counting 5 waves down here in primary degree, which I can as 1 and 2 and 3 and down to 3 there, 4 there, and 5 there. So I can get a low on the interest rates, and they're starting to rise now. We can look at that. But do I have this right? That's my question. So because this could be counted as down for 1, back for 2, down for 1, back for 2, and, you know, heading lower at that point. That makes a nice 4th wave here, doesn't it? Just the look and the feel of it going sideways like that. So I need to resolve that. So if any folks have got any ideas about that, that would be good. But make sure that you understand that you need to pull apart each structure here and make sure that that would have to be in 3 waves for that to be 1 wave, to be, you know, wave 1 and 2 here of 1 degree, and then a smaller degree of wave 1 and 2. So, and you need to check that to see if that's in you can get 3 waves out of that, you know. But anyway, I was starting some work on it, and you know, if coming down, this is weekly here, so coming down into that last day here. So I can see we've got 1 and 2 and 3 and 4 here and 5 here. So we can actually have a low in place here, but I still need to double check that whole trend, because calling, you know, having a trend going on, you know, since the 80s till now and saying, oh, that's the low, you need to do your homework before you call that in, you know what I mean? Otherwise, you not so much you look like an idiot, you know, that's, you know, we know that I'm an idiot, but it's just, yeah, we just got to get it right, that's all. You know, and I can see the banks with JP Morgan, they've had all this, and the Australian banks have had it as well, this initial move here. So these interest rates are tied to the banks for sure. And you can see, I can see that JP Morgan's, I won't bring them up at the moment, they have more to go to the upside. I can see the Elliott wave count, they still have more to go to the upside. So they're kind of following this pattern, even though it's kind of low here. I need to bring this into intraday here, but I don't know how to resolve this one here yet, if this is going to be like wave 1 here with an A and a B and a C wave here, or this is just a truncated 5th wave at this point or something. So I don't know that, but I've just started to work on this trend to the upside here, and as you can see, I've, you know, still got further to go. The interest rates have still got further to go up here. But anyway, my main point with all of this is that if interest rates are going to rise, you know, we need to see what drag that's going to have on the stock market as well, because, you know, the higher rates will you know, people are borrowing money to put in the markets, you know what I mean? So into assets, full stop. Where was I? So I was just talking about coming back to the SP 500 here. This is just a 2-minute chart, and this is the cash market, and that's the top here. Right, so we've got that move down through here, and I don't see 5 waves here, you know. So I see this move down through here as an A wave, a B wave, and a C wave to this point, and then an impulse wave up here and an ABC pattern here. So I don't see 5 waves coming down in the cash market for this is coming back to the market. I don't see 5 waves. You could probably work 5 waves out of that, but it counts better as corrective here. So anyway, long story short, that 39.40 will give you the long trade at that particular point there, and that would be in line with the Russell as well at that point. Alrighty, look, I'll have a quick look at the stocks. I haven't looked at them this morning and haven't made any adjustments. This is Lending Tree here. So we talked about a top coming in place on the intraday. I won't go into it at the moment, but we talked about taking a percentage here. It looks like we've got a bit of a turn here now. So I won't go to the intraday. Probably we've got this ABC pattern here starting. I'm not quite sure, but I need to go in and check it out. But the idea was to take a little bit of profit there. So as I mentioned, I haven't looked at these from yesterday. So with Tesla here, we were looking at wave 3 here with an A wave here, a B wave here, and then 1, 2, 3, 4, and 5 coming into here. So once that becomes the support here, because we've only got 3 waves to the upside so far, so that could just be down for wave 1 here and coming back for wave 2, and then going down here again. So what we want to see is the arrival, the reaction. I know I'm boring you to death here, but you know, new folks are coming on all the time. So that we need that first high to go long on, or the second high here. And if they're breached, then we're on our way at that point. Okay, that's the safe trade there. Facebook here. We're long, we're keeping our stop out of the way. It does appear that we've got 1, 2, 3, 4, 5 just here. So we'll just monitor that for a while. We may end up coming down here for one more move before going up again here for that. I need to pull that apart, and because the video is already 20 minutes, 24 minutes long, I don't want to spend much more time on these, but I could be wrong with that. But check that out to see if that's 5 waves. If that's 5 waves, we're going to get a B wave and a C wave down here, and we can put that in as wave 2. I'll need to lift them up 1 degree, but that's okay. What's this one? Square. So with square here, it also looks like it's got 5 waves down here now. It's looking at 1 and 2 and probably 3 and 4, but that's pulled back too far. That's a bit of a problem there for that. It looks like 5 waves pulling down there. So if it can't get above 275, then if it can't find 275 as support, then expect another move down at that point, back down to here. Apple. So with Apple here, we were looking at, there's different ways to count this, but I was looking for another move down here to come back to the wave 4 here. So that you need to count 5 waves in this space. I can do that in the next video. So to find that low there, otherwise we're going to go long above that high here. I can see that's got more to finish off here to come back down. So it's good if it trades below the level, because normally when they come down, they'll have a bounce off them and then they'll come through. Now, when they go back up, they can do 2 things. That would be the short trade under that low there. But on the long side, short side would need to trigger that. The long side would need to create the first high above the level and then push up from there, and then you can go there. So you're using that number as the support. And if you look in the market depth, you'll see everything will be in the right place. You know, the bids, the demand will be on you know, in building up on this number. It will be at 8. The bids will move up from 8 and then up to 30 and so on. Alphabet here, we're taking a longer term view of this, so wave 4 here as wave 1 and 2 here, and then 1 and 2 here, and the third wave moving out through here. It hasn't really pulled back into the 2000 here yet, and I can see that it's got a bit high. That's a little wave 4 in here, so it's got a bit higher to push. It may be tied at this point, but we're just waiting for the pullback at that point. If you wanted to take some profit there, then that's a good thing to do as well. Only a small amount, just to lock it in, or just follow it up, have a closer look at it. We'll have a closer look at that on Monday, tomorrow, Friday. We'll check that out. And Amazon, so I was just cleaning a few things up there. So with Amazon, let me just come back in over here. Okay, we had our big triangle pattern here, right? So wave 3, A, B, C, D, E for that. And this wave D can be sitting over where wave 1 is, so that sort of haunted me a little bit. But we do, and you can count that up as an A wave, a B wave, and a C wave, I know, but also 1 and 2 and 3 and 4 and 5. So it could be counted both ways. Some folks will have a strong opinion about one way or the other. But if it was wave 1, then I was looking for an A wave, a B wave, and then 5 waves down here, which I'd count as 1 and 2 and 3 and 4 and 5 here for this. It was also possible that all of this was just the 3rd wave, and we'll have the 4th wave here, and then down for the 5th wave here. But that's just gotten a little bit large now, and taking out that top there was going to trigger us onto the long side. So that's what's occurred here. And we can look at this here as wave 1 here. It's still a bit of a trap here, so just be mindful of that, because we don't want the market getting away on us to the downside. So the market shouldn't break that. If that's going to be wave 1 in 5 waves, we can't see a low below here. This could be the next wave 1 up and then coming back 50 or 60% and then moving up here. The fact that this here too, when we look at it, it can just be three waves, an A and a B and a C wave here. So that's possible for that to be some sort of corrective rally at that point as well. That's where the risk is here. Normally when I put something, this level here is number 3, not so much the 3000 but the 300 here. So from the 3000 we got 1, 2, 3 that make up group 1, and we want to see if we can get support on that. So the right thing to do would have been to, when I've got that normally sitting there, still means that you need to refine it over here. So the arrival, the reaction, the first high above the level, and then this here, and then up. I may have said that, I may not have. Sometimes I do, sometimes I don't, but I'll just keep drumming it home. So really this particular move here should be sitting over here on that particular one here. So we could have it on here first, and then we can drop it down to the second high at this point here as well. So I'll just leave that there. And if you're in already, then stop needs to go under here. You could probably take the stop to that point, but you don't want to take it any further at this point with this, and we just need to see how that progresses to the upside there. All right, well that's 30 minutes for that video, and it's a little bit long, but yeah, we covered a bit of ground and food for thought, and yeah, we'll continue to work through those particular patterns. Alrighty, thanks for tuning in. Cheers.